The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Dominic Frisby, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to the Gold Money Podcast, hosted in association with Frisby's Bulls and Bears with me, Dominic Frisby. It is February the 6th and I'm talking today to the trader and investor Michael Hampton. He is one of my oldest friends and one of my oldest, or one of the original guests on this program when it started way back when. Michael, it's a pleasure to be talking to you again. How are you doing?
I'm fine. I'm fighting off dinosaurs right now. I've been around in the show so long, but I'm really fine. Thanks.
Excellent stuff. Now, I think when we first did an interview, gold was trading at probably less than $600. Today it's trading at about, I don't even know what it's trading at today, about $1,665. So a good $1,100 higher. And I believe, if the conversation that we had before this show started is correct, that you think it's actually making some kind of a low here.
I do. I mean, I've been drawing some channels on the gold price just recently from my daily diary on GEI. And what I find is that gold is now on the bottom of the channel, and it's stuck in a very narrow range, just on the bottom of that channel. There's always a chance it'll break down below it, but it doesn't seem to want to do that. Every time it sort of falls, it quickly picks up, starts moving higher. And so what we're seeing is a series of higher lows. Now, they're not much higher than the previous lows, but you kind of get the feeling that it's coiling up, ready for a big move up.
When you say a big move up, do you think like when it goes on one of its kind of 6 or 9 month runs, or and breaks out to new highs, or just maybe a move to $1,800 or something?
Well, this channel has been very consistent. It moves from the bottom of the channel to the top of the channel, and the channel itself is moving in an upwards range.
This is a channel
yes.
From the lows, is it? From the 2001 lows?
Yeah, I think it could go back that far. I mean, the one I usually draw is based on the GLD index, and it doesn't go quite back that far.
The reason the GLD index doesn't go that far is because the ETF was only started in 2005 or something like that. Maybe it was 2006.
Yeah, I think it was 2005, but I'll tell you in a few seconds here as I pull this up. Yeah, here it is. 2005 is when it starts. And yes, back then the GLD, which trades at a slight discount, basically you add a zero to the GLD price. The gold price was around 400 at the time, and GLD was 40. And now GLD is 162, and gold is at a zero would be 1620, but you have to add another $50 because of the slippage that's occurred during that period of time. So gold must be right now around 1670.
That's about right, yeah.
Yeah, and it's on the bottom of a channel, and a nice way to view that channel is you can draw two parallel lines, but you can also look on big charts and use 100-week moving average. And that'll give you a number of the really important lows. And I think all the important lows in the last 12 months or so, actually in the last 9 months, have come right on that line. And we're just above it now. So we failed to break below it. We've been supported by it. Gold's moving sideways, and it looks to me like it's waiting for some sort of news or impetus to move higher. And when it does, I can easily see it shooting up to, 172. That's 1770 or so on the gold price. And then we should test the highs after that if we go higher, back up around $1,900 on the gold price. And if we go to the top of the channel, that'll be much higher. I think that'll be around about, at least 2,200, maybe 2,500, depending on how long it takes to get there.
That would be fantastic and very welcome. Now, how do you explain gold's recent underperformance versus the stock markets? The stock markets are, of course, closing down on their all-time highs.
Well, of course, in general, both stocks and gold have benefited from money printing. And in fact, I do something on my daily diary, which I call a Bernanke racetrack. The idea being that both gold and stocks are running forward, and there's a race between them. And gold has been outpacing stocks on that racetrack. But just recently, the advantage of gold has narrowed quite a bit. And if you look at the SPY versus the GLD, the price is pretty similar. SPY now is around 152, GLD is 162. So, there's a pretty narrow difference between them. I don't really see GLD falling below stocks. In fact, I think what's happening now in the last few months is when the gold price goes up, gold goes down and vice versa. So they're kind of counter-cyclical to each other, but both with an upwards bias. Okay? So I think probably what's been happening is money's been moving out of gold into stocks. And that's one reason why gold's been suffering a bit. But gold is now cheap enough and well supported. I don't think it'll go much lower. And it'll probably move up when stocks move down, and maybe move up even if stocks move higher from here.
Yeah, now the big kind of overwhelming trend of the moment, I suppose, apart from stock markets testing their all-time highs, is this fall in the yen, which is kind of part of the greater battle that is going on that's been named the currency wars. And if there's one thing, fiat currencies can all trade up and down against each other, but they hopefully, I think a lot of gold bugs are hoping anyway, they will all fall against gold. What do you make of the currency wars at the moment?
Well, yeah, I think that's a really important thing to look at. In fact, I think currencies is probably the number one thing to watch during the course of 2013. I think what we're going to see is a series of drops in currencies. The yen is the first one to get hit by this drop, and I think the yen is probably headed to 100. It's 103.5 or 104 right now. It's come down a long way already. And we spotted this trend when the yen was quite a lot higher, but I think the yen will drop fairly quickly to about 100. We're nearly there now. And then another currency, possibly the British pound, will stop dropping. And then we'll probably shift elsewhere to the euro or to the US dollar. And what we'll probably see, in my view, is a series of episodes where one currency after another drops. And they're going to drop against the package of other currencies, but they're all going to drop against gold. And the funny thing about the currency wars is I think you could regard gold as a currency. A lot of us talk about it that way. And if so, gold is the only currency that, people want to see higher. The people who are responsible for printing it, i.e. the gold mines that mine it, they're effectively printing the currency or adding currency into the system. They want to see gold higher. But the people who print dollars, the people who print yen, the people who print euros and pounds, they all would like to see their currencies lower. So I think gold has a big advantage because the people who are responsible for the supply of it actually would like to see it higher.
Okay, so let's talk about the people who print it, the gold miners themselves. What do you make of them at the moment?
Well, obviously they're cheap. And if you go and listen to the usual gurus in the market, people like Jim Turk or Frank Holmes and so forth, they're talking about the fact that if you divide the gold stocks by the gold price, that it's very, very low. I think one of the lowest ever, and the dividends of gold stocks are amongst the highest in relation to bond prices they've ever been. I think Frank Holmes said that they're at a level they haven't seen since 1946. So if you think gold is going higher, as I do, and gold stock dividends can go up, then this is a wonderful time to pick up some cheap gold stocks.
And the juniors that pay no dividend but consume capital, mostly going on flights and expensive hotels for CEOs as they try and raise more money.
Well, that's an interesting point, of course. There was a conference here in Hong Kong about 2 weeks ago, and we had some worthy people over here like Ian Telfer, and the head of Dundee Precious Metals. And they were talking about this phenomenon, and that was a big topic of conversation. And a lot of people aren't very happy with the way that gold miners have been managed. And they feel that salaries have gone up and share option awards have been higher than the performance justifies. And I think we're getting some real pushback on that now. And I think, companies are going to be forced to clean up their act a little bit in terms of corporate governance. So this is actually a good trend that people are talking about. And I think the companies are going to be under a lot of pressure to be managed in a way that's better for shareholders. So I actually take that as a positive sign now because it is being discussed so much. But yeah, I mean, they've not really given enough attention to the needs of the shareholders, and I think that's going to change. I think we'll probably see higher dividends in the near future. We'll see lower spending. We'll see lower bonuses and so forth, and we'll probably eventually see higher gold share prices coming after that. But the way I look at the miners right now is I actually divide the gold-related market into sort of four sectors. One is the producers, of which consists the majors and the juniors. And the juniors are actually cheaper now than the majors. The second area is development companies. That is, companies that have found a good deposit and are looking for money to develop it, or they're looking for someone to buy them. Those companies in the second category are very cheap indeed. And in fact, that's a very good area to look at the moment. And the last area is the explorers. And I think the explorers have probably done a worse job than the miners have, because they haven't found much gold in the last few years. They spent quite a lot of money. And they too have spent a lot of money on things like airfares and salaries and options and so forth. So I think the explorers is an area that probably needs some serious consolidation. I think there are probably too many of these companies around. They're still spending too much money, and they're not showing enough results for it.
Well, you don't need to preach that to me.
Yeah, but also just one thing in the developing area, which is very interesting, is you can find a number of companies now where if you look at the share price of the sort of top company, it's trading at, say, $1 a share or 10 cents a share, or whatever it might be. But if you look at the underlying project they have, it could be one that's already drilled out. And that project might have a value based on, net present value, which could be 3 times, 5 times, even 10 times as much as the company's trading for. So, if ever the financing comes back or acquisitions start up again, these development companies are very cheap indeed. And the good news is they don't have to spend a lot more money on finding an asset. They've already found their deposits. And they basically need to find financing. So what I think the market's looking for there is they're looking for some creative ways of financing the mines. And, we're going to see more of that in the future. But I think that's an area of great opportunity right now.
Yeah, well, that makes sense. And there, we're already getting all sorts of kind of debentures and forward gold sales and other sorts of tricks to get things into production. And there's deals being done with companies, Waterton and various other companies, Red Kite. They're all doing, financing mines in unusual ways. So I suppose that's a trend that's starting to happen, and let's hope it becomes more prolific.
Well, let me ask you a question. There is a sector which has outperformed gold.
Yeah.
Which is a gold-related sector. Can you tell me what that is?
I can. Royalty companies.
Exactly. So the market likes royalty companies right now, and I think we'll be seeing that used a lot more in the near future as a financing technique.
Michael Hampton, it's been a pleasure having you on the show again. I realise it must be about 3 a.m. there or something ridiculous.
It's pretty late, but it's been fun to be on.
As we close, why don't you give out your website address?
Sure. It's globaledgeinvestors.com.
Good stuff. globaledgeinvestors.com. Michael Hampton, thank you very much.
Bye for now.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.